Hey traders, happy Wednesday, everybody. Welcome to Charts and Coffee. Great to see everybody here. And I already see some questions coming on in, so absolutely type on those questions. We'll jump in. Couple things we have to look at. We are in the heart of earnings season. Obviously, we have most of the major financial earnings now in the rearview mirror. We have Bank of America. We had Bank of America today. That was a pretty big one. Top three weighted within the XLF. And then as we go down to tomorrow and into even next week, we start to see lower weighted stocks. But I'm going to be taking a look at financials and regional banks. That's something we'll definitely be doing in the Sector Secrets Mastery live trading. That'll be coming up in 19 minutes. So I'll see you all there in that room. What else am I looking at? Let me give my Charts and Coffee folks here, our Caffeinate and Dominate crew. XLP, take a look at some staples. KRE, I'm going to selectively look at some individual boats within the tide of XLF. So, we have a receding pool of trends. And you might think, Rob, are we still focused on uptrends? No, but they are the priority. So when you think about what type of market do you want to focus on first when you're building your watch list, uptrends are the most predictable, right? That is the best for the broadest group of market participants. After that, we want to focus on chop because that's the next thing we're dealing with. I'm not really diving into downtrends quite yet. The next thing we're going to focus on is chop. So then I want to start looking at the way in which uptrends transitioned into chop and then where I have oversold levels. Now, you all know we've been talking about this for many, many years. Throw the Darvis on that chart, wait for those price levels to be reached, then take a look at, if you've got it, the V-score. If you don't, then take a look at, you can look at them both, the slow stochastic again. So those are things we can do in chop. Please don't prioritize the chop and try to find chop that has some nice automated Darvis 2.0 lines drawn already on them. You might say, Rog, I don't have Darvis 2.0. Easy fix. Head on over to countdowntrader.com and you can download that tool gratis from there. All right, so that's what's on my mind this morning. We got a lot of earnings we're dealing with. Do have some sectors of the market that I like. And, as much as we might be looking at XLF, let's keep in mind KRE has been really quite steady. And so opportunity is there with the double green. All right, so let's get to the questions, which is what this show, of course, is all about. And first up, Lana, I hope I said that right. I hope I pronounced that right. How do I decide on the direction of the intraday trade in a daily choppy market environment? So let's tackle the first part of that question. Yesterday, I will say that being below the close of the previous session and then being below the low of the previous session, I would like to prioritize shorts, which means I'm looking for a short setup, ideally. But yesterday, most of what I had were just quick little longs, and we took a couple quick little bounce longs and then just kind of, called it a day. Just sort of a mixed day. Couple decent bounces that were tradable yesterday. But what I want to do, and let me show you what I mean by this. In fact, the last day trading class that I did, I think a lot of people were surprised that a lot of the pre-market homework has nothing to do with the Asian session or the European session or even the UK session, but rather, hey, Rog, what is that daily telling us? What is that daily telling us about where we are in relation to the previous session close, high or low, right? So that's one way you can determine sentiment. Doesn't necessarily mean that I'm going to have a short setup, but I know there's a lot of pressure, downward pressure on the market. And then, so always know, and when I say close for futures, it's 4:15 p.m. Eastern. For stocks, it's 4 p.m. So know that 4 p.m. close, know the high and low. In other words, have a daily time frame somewhere within eyeshot when you are day trading. I think you're going to find that very, very helpful. All right, moving on. Hey there, Michael. How are you? I have a question this morning about Darvis levels, right? Our Darvis 2.0 free indicator and our Darvis 3.0, the one with signals, which is a premium indicator. Are they forever valid? Or once they're broken, do they become invalid? For example, Microsoft has Darvis from September. Okay. Are those still valid? So, I think a lot of times all of us kind of distance ourselves from the reality that everything that we look at on our chart is in some way related to, is this support or is this resistance? Am I buying support? Am I buying through resistance? Am I selling at resistance? Am I buying at support, right? Or selling through the support? It's all about where are those levels in the charts that could be tripwires for us, right? So, as far as Microsoft, are they forever valid? How do we look at this? So my feeling is within the last year, the market has a memory, and I'd say that for a daily time frame, the memory is about a year, 6 months most intensely, but the market memory is about a year. Now, when you shorten the time frame, it also shortens. So if you're looking at a 60-minute time frame, maybe about a month. You're looking at a 5-minute time frame, maybe about a week, right? So the market memory is one way to start to discern between Darvis levels, our Darvis 2.0 or 3.0, whichever you're using. And by the way, this is not exactly traditional Darvis. We've done things with those minor highs, lows, call them swing highs, call them ham sandwiches. Doesn't matter. But we've done things where we've evolved past the 1950s, 1960s logic of Nicholas Darvis's original creation. Said, how do we modernize this for the markets we're dealing with in 2020? So, and by the way, we've had some interesting action, to your point, Michael, at that level. So I would say this: start with price. And I love that you're starting with price. Let me grab my drawing tools here. Start with price, and we reach a Darvis level, or maybe it's a volume ledge, or maybe it's a Fibonacci level, right? Whatever it is that your process uses. So we start with price, and then, we kind of carry that forward. By the way, here's another important level. A lot of volume right there, good volume ledge right there. Then we can go down to our V-score. Are we still above the mean? I mean, there's a certain amount of bullishness when we're above the mean. Then we'll take a further trip down into this subchart here, and we'll ask ourselves, all right, is this the slow stochastic overbought, right? Am I getting that red to green? And frankly, that happened here. So I would consider where we are right now, just taking a little bit, and I do mean a little bit, taking a little bit of heat from that original oversold switch that we would have seen right about there, right? That's where we went red to green, right? You can see that red to green shift right in there. So these two candles, I think you're just basically taking a little bit of heat from that particular Darvis support level, which is perfectly fine. And then I think ultimately what we want to do is see the market rally. Now, all this actually ignores one important fact. All right. Now you might say, okay, that sounds interesting, Rod, but what's happening here? What's happening here has nothing to do with the slow stochastic oscillator. It has nothing to do with the Darvis. It has everything to do with the window into earnings. January 25, Microsoft earnings, which means the cutoff for me personally for any trades in Microsoft is Jan 11. I know that two things start. That's that window where I want to avoid it. Implied volatility is going up. The edge then becomes a little bit more towards the option seller, premium seller. Your hot zone of earnings is going to be changing the way in which the market moves and even respects the technicals. And that's why I say avoid those 2 weeks, because the edge that we would normally have if we were outside those 2 weeks. I mean, I'll give you an example, right? Let's not be hypothetical about it. Thank you, Darvis. Thank you, Darvis, right? Do you see? And that's outside this 2-week, cutoff that I look at. Now, if you're not familiar with the 642 window to earnings, 6 weeks out, I start looking at which stocks are coming into earnings season. By 4 weeks, I'm really starting to think about how we can position ourselves. By 2 weeks, I'll manage what I have, but I won't enter anymore. You can find that 642 earnings in our most recent countdown newsletter. It's free. Check it out. And I think that'll help a lot. But I think, Michael, to your point, that's what's happening here. But the fact is, use those market memory lookbacks, and I think that'll help a lot. All right. Okay. So next, and great question, by the way. Great question. Coop asked pleasantly. Oh, I've known Spencer and the crew over there at Benzinga for many, many years. And I do love, I think I started, gosh, it's been a while. And I do like the crew. I love the conversation. It's frank, it's fun. It's very much a trader's show. And kind of like I said there, it's not the most ladylike way to say it, but yeah, we're in a really kind of stinky environment. We're in a kind of we're in an environment where we're getting the kind of chop that has the backdrop of the macroeconomic shift, which that combination, a lot of folks are asking, Rog, why are you so concerned about this chop? Why is the conversation since December been about chop? Because this chop, unlike the previous chops, have a certain proximity to an upcoming rate hike, to an upcoming shift in monetary policy. It's not just the secret squiggles and price, but it's what backdrop, in this case, specific to the central bank action, are we in? So yeah, thanks. I appreciate that. Bruce saw me on Benzinga. That's awesome. They're great. They're great. I do enjoy that time. All right. Next up is I'm trying to look for a Pepe. You're asking about biotech. I don't play penny stocks. Yeah, no. Let me mention that. Yeah. So great question, but not one that I can really help you out with. Number one, I don't like biotech, and I certainly don't like penny stocks. In fact, my cutoff for stock price is usually $20. When you're playing penny stocks, please remember that a reflationary environment, like we saw in 2020 and 2021, mostly 2020, is very good for penny stocks. It's very good for all stocks. So I think a lot of folks playing inexpensive names found, oh, this is great. And then in 2021, the wheels fell off the wagon and they haven't been attached ever since. I won't call it a fluke. We have to know the season that we are trading within. And that season in 2020 specifically, and even in corners of that in 2021, that season is sort of, no longer. So I don't play pennies though. So that being said, I'm talking generally about how penny stocks benefit from a certain environment. All right, Eighth Trader, how are you? Good morning. Which one of my trading services is the most appropriate for me who trades stocks? Well, I only have two. I'm either trading futures in the futures room, and that's where all my futures trading takes place, or I'm trading in the mastery. So the Sector Secrets Mastery. Eighth Trader, let me tell you this, because I always like to give you all heads up on sales and promotion. I don't know if I'm supposed to, but I do like to let you all know, because I sincerely believe that there are tools and the rooms can really help you out. But if I can get them at a better deal for you all, that's why I always say, wait for the sales. You want one of my indicators, I'll let you know when they're on sale. I'd rather see that money go into you, putting that money into your trading account. So we have a promo for Sector coming up. Maybe you've got the email, and we're doing some very cool things where we have some extra bonus sessions to get people going. We're going to do the quarterly, because that'll happen in April, I think. We're going to do this quarterly breakdown for a longer term time horizon, because I get so much of that question as to, Rog, how do you think about portfolio construction, especially in this environment right now? So we're going to be doing a little bit of that. So by the way, if you're already a member, you're still going to have access to these sessions. I mean, I always appreciate the members who've been with me since we started this just over a year ago, the mastery. So check that out. That's setting up, I think, right now. And then those are some of the things that we have coming up. So I appreciate the question. Hey, thank you. All right, moving on to David. So nothing's going to be sent. It'll be sent in March. There you go. So heads up for that. Heads up for that. If you all been wondering, hey, Rog, I think I want to kick the tire on the tires on your mastery. If you sign up now, you're still going to get all those bonus sessions. Right. And I don't think the promo is going out until the end of February. It's on a price reduction promotion. So don't worry. You're not going to say, I could have paid less. No, no, it's the same price, but we're going to be adding a lot of different services to it to get you started quicker. So, anyways, I'll stop talking now on that topic, but yeah, that's what it is. All right, David, the rut. Yeah, let's talk about the Russell. Let's talk about that Russell. It looks oversold on the daily and the weekly. Is it time to go long, or do we see a downtrend? All right, so let's start off with structure. Now, you mentioned weekly. Somebody asked me, and it was a good question. Somebody asked me on the one of the free videos, or maybe it was a question left here in Charts and Coffee, which was, I don't talk about the weekly much. Why don't I? I think the weekly categorically gets more traders into trouble than not. And why do I say that? The weekly range is huge. You're talking about 5 sessions, like 5.5 if you're looking at futures, sessions wrapped up into one candle. What kind of range could we put in a week, right? If that is beyond the tolerance for risk that you have when you dial it down to a daily, or worse, use a weekly to look at a 60, that's just a categorically bad, unsynchronized idea. All right. So I love that you brought up the weekly. And I agree, there's some interesting support levels on the weekly. That's just sort of a bigger picture, 60,000 foot view. Now we have to say, well, what levels have to hold? And are we seeing signs that they could be holding on the time frame that we're going to set the trade up on? So as a trader, I almost never set up trades on a weekly, but we start getting into portfolio discussions, like I was mentioning we're going to do in the mastery. Weeklies come into play a lot. Sector rotation, sector studies, macroeconomics come in a lot because those are these giant tectonic plates that are slow moving, but once they get going, they're gonna be noticed. So that's a longer time horizon, which then syncs up with a longer time frame. But I never really want to let weeklies do much more than, that's kind of interesting. That's it. And then we dial it into whatever time frame we're going to set it up on. All right. That being said, we've got an interesting set of circumstances here. We've had a choppy market since the end of November. Thank you, JT Multi. We have some good support here. I'd say, no, you know what? I'll take that back. The V-score is signaling a little bit of a, hey, be careful, but we're bouncing off the -2 standard deviation. So we're a little far from home. We could see a little bit of a snapback. That's what the V-score is saying. And because we're in chop, you guessed it, we're going to head on over to the stochastic. Is it oversold? It is, but it's still not quite giving me that signal where we go red to green that I want to see, right? Red to green, red to green, red to green, red to green, right? That's what I want to see. However, we do have, interestingly enough, a minor low shaping up. Take a look at the high, and I'm looking at RTY for IWM because if there is an ETF that has a related futures contract, that's what you want to do. I would wait until we start getting above, say, 2107 minimally, maybe 2110, before I start thinking about a longer term move to the upside, where all I'm initially going to look for is about a 2183, 2180. By the way, that's where the 21 exponential 21 propulsion's coming in, 2180, 2183 initial target. Okay. So not yet for a downtrend, not yet, because then we'd be red over red on the JT multi. Lots of bearish momentum though. Absolutely. All right. As far as day trades go, Patrick, there's nothing I can do before 9:20, right? But what I will say is take a look at where we are in relation to the previous session close, high and low. That's all I can look for right now on the daily. And then we'll start taking a look after we get the clearing. What kind of high-low range do we get during that clearing period? And then do we get a breach? Are we hitting a V-score low where I can have a volume-derived bounce off support? Maybe I'm hitting the hourly price movement range, and I don't think I have that running on this chart. But then I might be hitting the hourly price movement range for a volatility-based level. So I'll know that more once the bell rings. Okay. All right. And I realize I'm out of time and did not reach all the questions. So if you have any questions that I did not get to, I am not shorting the indices yet. Not yet. I don't have the okay to do that by way of market structure. at all. In fact, if anything, I think we're putting in a minor low potentially. These are choppy markets, but I don't think they're bearish markets yet. When will you know they're bearish? I'll tell you right now. When I log into Charts and Coffee and you see this indicator right here, the lower row, go red. When we are red over red for at least 2 sessions, I like to see that. Once we go red over red, that's where the downtrend is looking like it's gaining traction, according to the 8, 13, 21, and 34 EMAs. That's that market structure cue. Then we're back into a trend. I'm no longer concerned about overbought, oversold. We put that stochastic oscillator away. We start looking at shorting the rip. Once we get that, not yet. And this applies to all the indices, until I get red over red. So as always, thank you so much for all the questions. Feel free to type. If I missed your question, I'm going to go back today, this afternoon, and go through yesterday's Charts and Coffee and Monday's Charts and Coffee and answer some of the questions that were there. I know Trish is on them too. So if I did not get to them, let me know. I'll go ahead and answer the questions in the comments right here at the Simpler Trading YouTube channel. Thanks as always for being a part of the Caffeinate and Dominate crew. I will see you, you know it, tomorrow. Be good to each other.